Good evening. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for Tuesday, the 18th of October, 2022, and yippee-yay. I had an idea. I've been writing about these traders that have been saying earnings. Ira, pay attention. They're going to be better. I'm betting my career, blah, blah, blah on it. I got to give credit to the guy from Cantor Fitzgerald. He gave me an idea. I think he's right in his idea. I don't know if the end result is where he thinks it's going. But he got me going yesterday. I was even writing about him, making this bold statement, and it dawned on me he's right. I want to give him credit. What do I think he's right on? The market has shifted its focus. Why? Simple. We don't have to deal with the Fed until November 2nd. We know they're going at least 75 basis points, okay? They're not going 50. There's no reason for them to back off given the jobs numbers and the CPI they saw. So far, the other data coming in isn't so red hot to make them go to 100. So I think that's a lockup for 75 basis points. Okay, market knows it. So what else is left for the market to deal with? Well, let's think this through. We just saw a retest of the June lows, and the market wore itself out, got under those lows, washed out in close proximity to those lows, the stops there, and managed to turn itself around. And for you volume traders, it was on good volume. Then we began the earnings season, and the earnings are a surprise so far as a group, in my opinion at least, the headline names, to the upside. Netflix today, United Airlines, all the banks, well, most of the banks had very, very good results with them. Where's been the bearish news? You're not getting loaded with bear news. So it's easy to get, number one, new buying in the market going, I'm missing out. You tested those lows, you didn't fall apart. Number two, headline news comes out of the earnings, like Netflix, up 14% in the aftermarket. I missed it, it's going to go. Number three, certain fundamentals are going to carry. If Netflix is good, so you're going to get the Disney in the evening going up, you're going to get all the others joining into the parade. Well, if they're good, we're going to be good. And that's the mentality at work. Where I differ is come another week, 10 days, right in that zone, we're getting ready for the November 2nd rate hike. And then the Fed talk. How aggressive are they going to be? Then we're going to see the CPI and jobs again. If these numbers don't do what the Fed wants, you extend that out to January, and now you don't have the earnings for you. Number 3 or 4 on the list. So far, we aren't seeing that the inflation and or strong dollar is totally hurting sales. We have Microsoft yet to report. We've got Apple having real problems with the iPhone 14 Pro Max. Big problem, okay? I love my 14 Pro, but not the Max. I don't want that big thing. Well, apparently nor do a bunch of people because they're cutting production of the number. That isn't good. Yet, well, the stock dropped on it, looked around all day, and traders are going, so what? Everything's going up. Let's buy. And they drove it up a percentage point, full 1%. Not bad action. So this is where you're at. That's the epiphany. I should have realized it, and it took me to write about it on another person and going, he's got it. His name was Johnson. Good call. So I asked you yesterday, what should we cover? Well, I haven't covered Walgreens and I don't know when. So let's take a look at Walgreens. Okay. So the market has certainly fallen out of favor. It's no longer up here near $50 a share. It's $33 a share. At one point, it got down close to 30, so probably down 45% from the recent peaks. The market has come alive recently. It's got higher lows, higher highs, and obviously, if you think about it, these stocks were all up great because when the COVID scare in America was there, we were all running into these drugstores, buying everything in sight. Then, as we got used to COVID, it's still here, but we're getting our new booster shots. I think you've accepted the idea, I pray you have, that this is like the flu now. You're going to each season, maybe more than the flu, maybe each season change. We have to get a certain booster for whatever the new variant is. But I don't see tents up anywhere. I don't see people lining up emergency rooms in America. I'm not hearing about it in most of Europe. Different game has taken place, all right? We've adjusted. Restaurants are open. In Illinois, they just told the hospitals and everybody mandatory masks are not necessary. The hospital can decide that's their policy, but no longer a state rule that you have to wear a mask to go into a medical facility. This just shows you how far this has all gone. Well, that impacted these. The foot traffic's not the same. I remember at the height of the COVID, the lines waiting there and waiting for your shots and buying of masks, and they were out, and you're waiting for when the next shipment's going to come. You were there. You did it. So now the market's got it. It's trying to get its footing back. I see that. Where's the market now? Well, it's holding over the 18-day average of closes. The trend is up, higher lows, higher highs. If the market falls to 32.51 in this environment, it probably gets bought. Stops would be right under the last break low, I would think. Possible objective, the 50-day moving average of closes. Or what about the Bollinger Band? That's the one it's going to be, right there. So in between, let's call it right now, 32.51 and 34.09, that's where I think the play is taking place. So I think the market 2 days ago reached up, created its top, pulling back. Would be surprised if it doesn't get bought, like I just said, with stops in that area. But what about overbought, oversold? It's overbought. So do I think the pros are going to reach in the 70 reading down there? I don't. You may. I don't. Netflix. Remember, 14% higher in the aftermarket. So it shot through this top here. Is it garnered another 2.5 million subscribers. So it got back pretty much what it lost the past 2 quarters. And it's making money. And its new product at $6.99 for ad-supported streaming is going to be coming out now. I mean now, November. It's literally right in front of us. They live and die by their content. You know that. It's hot content you got to watch. It's not so good. We don't have to watch. It's like running a movie theater at home. It's a crazy business. But the cord cutting didn't go on the way that people thought for these people. I'm not talking just cable. I'm talking they brought people back. I don't know what they did right, but they did something very right. Is it a trend? It is not. What really happened is if you and I dissect this, the market came down over here and got itself back to the 100-day average, the lower Bollinger Band. And if you go back and you look at these videos there, and we were covering it, I know I should be like a broken record. I would be saying that's where the pros are covering their shorts. You're oversold. You're down to the first challenge of the 100-day average in the Bollinger Band. Say goodbye. That's what I would expect that I said. If I didn't, write me. I think I said it. And now you've got this. Are you still trending? You're not. Even when you're up here, no. And over the upper Bollinger Band, you buy it. It's probably not the best thing you can do for your health. Apple, as I said, impressive. They don't do well with their phone, and they're coming alive here. Okay, that's impressive. Higher lows, higher highs, fighting right through there. Is it in an uptrend? It is not. It did not close over 143.85. It's at a resistance point that if it goes with the general market, which is up in early trade tonight, I could see an argument back into the 151 to 153 area, right in there. Okay. Am I interested in the stock here? Not yet. Disney. Well, if Netflix is good, Disney's going to be good. Better products. I mean, everything, okay? Netflix wants to be a form of a Disney, but Disney is Disney, all right? So, coming alive, okay? I'm not convinced I like their theme parks. I'm not convinced I would take kids or could afford to take kids to the theme parks. I'm not being funny. I mean, I look at my friends that take their grandkids, and we laugh about it. We go to dinner. I go, how much did that cost? It's a fortune. Okay. Resistance, 102.04 to 104.30. Trend up, bias up. If you're a buyer at 97.21, I'm guessing. Stops, 96.25. You're only looking for where that Bollinger Band comes in, and you're starting to go sideways in the Bollinger Bands. I don't know. I'm not crazy about that. XLF, this is a spot to come out of the market, not in the market. Out of everything. This is it. Market. Goodbye. You're up to the Bollinger Band, knocking on the door, 100-day average. You play that it'll keep going. Play it. Couldn't get me near it. Same thing in XLI. First challenge of the upper Bollinger Band, so long. All right? No different than first challenge down here, the 100-day and the Bollinger. Then you come up and you got your other trade signals and an embedded reading. That play became easier. This is a very difficult one to try to jump on in an overbought market and think it'll keep going. Then we get to the semiconductors. This keeps me away from joining the bear parade. It's too oversold, and around the market, everything in stocks is trying to, as a whole, lift itself a little bit. Okay, there'll be another opportunity, but this has got big problems long term. There's nothing bullish on that chart. In the home builders, it's amazing to me that this can hold up. I mean, every piece of data just shows you all the problems they're having. Now, tomorrow we get some numbers on permits and new starts, and I see that the expectation is for the permits to go up. The starts down about 5-6%. Markets, it temporarily, what? Sideways. This is just sideways action. Remember what I tell you? When you start narrowing in and you get this, please stay away from these. This is where you're selling for the break. You don't get down to your objective. You buy in here for the rally. Probably don't get up to your target there either. Be very careful. This is where the market decides the next real move that's going to happen. Energy sector. Are we embedded? So let's go back here. We take a look. For embedding, the numbers, the red and the blue, and they're called K and D, but just so you know, they got to stay over 80 for several days in a row together for them to be embedded. Here's the third day. They did it. So this means to me that the pros are now willing buyers on breaks as long as the red line does not close under 79. Target, the potential is 87.10 up there. GLD, what is the trend? It is down. You are oversold, but the trend is down. I don't see anything friendly on that market. SLV, I told my traders the other day to cover their shorts. I said, I don't think we're going to hit the lower band. You're too oversold. I think we're overstaying our hand. And as it turned out, I got lucky, okay? Don't win every trade. Believe me, I was wrong today in corn on the futures. Not big, but wrong. Copper, lower highs, lower lows. Trend is down, not up. You'd have to get over here, 29.11, to get me friendly. If you play it, please understand them. This is the objective, 26.77. You're working in pretty much sideways type action. It's not doing what it did here in trending. It's not embedding either. It's just getting overbought and oversold a lot, which is a problem. I'm more inclined to be bearish because I don't see the world demand on anything picking up. I'm very happy that U.S. stocks are getting early on great earnings reports. But if you were to ask me, do I think this is a trend? Not yet. Not yet at all. I need to get through where the Fed stops wanting to hurt the market and cutting off demand. Then I'm going to take another look. By the way, one of my epiphanies is I have decided I'm no longer as bearish as I was. This current rally off the low, how it came off new lows, rallied back, has got me thinking the daylight, the tunnel, the light at the end of the tunnel is there now at the bear market. How far down? We'll be able to judge it. But suddenly, I see the light at the end of the tunnel, which means in my mind down the road, I'll be looking to be bullish. Not here. I think it's too soon. This is, for me, I could still be very wrong, a bear market rally. TLT, still bearish. Embedded reading. I think the pros are just going to hit this on each of the rallies until the red line closes over 21. Dollar, no trend. Just drifting around, not going anywhere on that. If the dollar's not trending, the euro's not trending. They are mirrors, reversed mirrors. Why? Because 40% of the dollar index is made up of this, and that's where I see this market at this point in time. So I feel good that I got a handle on it. Now, what am I going to do with that tomorrow? Well, that's where this is all going to come alive, because what I'm going to do tomorrow is we're going to take a look at what's going on in my SPDR ETFs. Now, in the morning, I record typically just after 9 o'clock a.m. Central Time. I need the government reports to be out of the way. And unlike the futures that trade 23 hours a day, these trade 8:30 till 4 o'clock Chicago time, all right? That's just some of the markets I cover. I like the first half hour to get the market, get the algorithm money and everything in it, get the reports out of the way, then I step in to the marketplace. And with that stepping in is where I think we get the fun. So I'm covering a whole spectrum always. We rotate the individual stocks, but all the major ETFs I'm covering there. I'm going to talk fundamentals. I'm going to talk technical to you. We're going to look at each chart as they're open and trading, and I'm recording it and giving you what I see. I'll be switching at times back and forth between daily and weekly charts, and you're going to discover this is beyond inexpensive. You spend more if you go to Starbucks every week than you will in a week. Buy a lot. Then this is going to cost you for 30 days. I mean, it's meant to be something that we give to a lot of people, and I think that it accomplishes its goal. So to learn more about it, it's pretty simple. Just go to our website under Market Research, or take and watch my finger, follow up here, take your cursor, move up there at the very top, click on the icon, and away you go. I'm Ira Epstein. You have a good day. I'll see you in the morning.